So just to tell you a little bit about Katherine. She is a supporter of the Boys and Girls Clubs of Metro Atlanta and Girls Inc. So some organizations really important to her. She spent 13 years with Microsoft. So really that's an accomplishment altogether. We all know these days sticking with a tech company can be tough, that there's so much demand for us in the industry. So it's fantastic. And she's the Strategic Alliance Manager over at Avalara. She's going to be telling you all about sales tax. Always the elephant in the room in e-commerce that we know. It's always a challenge to keep up with all the regulations. I won't tell you anything about how we feel about government on the subject, just that we know that for us it's important that our clients stay compliant and sleep well at night on those arenas, and that they don't have to bear the burdens too much on their ends, and they can focus on what they do best. So with that, Katherine.
Thank you very much. So thank you guys for coming today, and thank you for spending some time with me today. You'll see my little guy up there in the corner. Because Avalara, and I'm going to talk to you about my company and what we do, but Avalara wrote a series of books, and one was the For Dummies books, right? So everyone's used it For Dummies book. I've used many of them in my lifetime. I think they're awesome. And we participated in writing one, Sales and Use Tax for Dummies. You say, wow, is it that complicated? Well, it is. It is. But we try to make it real simple. And our tagline is, we make sales tax simple. We make it easy, rather. So I'm going to talk to you guys a little bit today about some of the things you need to watch out for. I'm trying to make this educational and fun, and as much fun as sales tax can be. And we'll see if we spark anything today that's interesting to you. So we're going to talk about what is Nexus, and why do we care, and where do taxes come from, and why is this important to me as a small business. And I'll just start by saying as well, so Avalara, we've been in business for over 10 years. We've had explosive growth, so 410% growth over the past 3 years. So we're really, really excited by that. And we have everything from very, very large customers. So as an example, Groupon uses us, Best Buy uses us. We have very, very large customers. But our lifeblood is small and medium business, like yourselves, right? Because that is the most challenging point in the marketplace, because the big guys, right, they have people, they can devote people to understanding taxability and all those different things in accounting. But for a small business, that's very daunting. I can't afford to hire this guy, or my accountant, wants to do this for me, but it's kind of expensive. So we try to make it really, really simple, and we try to scale the cost of our solution to make it affordable for everybody to use. So we have a giant segment of our business is small and medium business. So we're going to talk about, once again, product taxability. I'm going to share some things with you guys that is a little bit interesting and amazing. When I first came, as Robert mentioned, I came from Microsoft, and I worked in the accounting space, the ERP space, the dynamic space for 13 years. And before that, I was a business partner working, doing business consulting and installing ERP solutions and accounting solutions. And when I first came to Avalara, I'm like, how complicated can it be? So we have to go to school, we have to learn all this stuff. And I was like, wow. I was like deer in the headlights. After 2 or 3 days, I'm like, okay, I totally get it. So I'm going to share some of this stuff with you guys today, not to scare you, but to make you aware, because it is very complex. And then talk about the tax man, right? So how to sort of avoid having audit risk. And talk about also the problem with services. A couple of folks have come up to talk to me today about services, and there's a challenge around that. I'm going to share that with you. So as we all know, taxes are a big part of every state's income. So probably most people did not realize how big it is. In most states, it's almost half of the revenue of that state. And as we all know, we don't like when our states come to us and say, hey, we're going to raise your property taxes. So they don't, right? What they do instead is they put these special taxes on your sales tax, right? So all of you, I'm sure, have experienced, especially if you're in a large metro. I live in Atlanta. So we have a new tax now we're rebuilding the Brave Stadium into a different part of the city, and we're rebuilding the Fountain Stadium because it's only 15 years old. So we get to rebuild things a lot in Atlanta. So what that means is they assess additional sales taxes, and we all unfortunately have to pay them. It's much easier to get that through than to raise someone's property tax. So that's sort of how the states work. And we're seeing more and more of that. Almost 3/4 of the states in the United States have a tax deficit, right? So they have an income deficit. And so that's why they come after you guys. So In addition to that, one of the other things they're doing is doing more audits, right? So we're seeing a dramatic increase of audits because that's free money in their opinion. So we're going to talk a little bit about that as well. So when we look at the United States, you'll see in the background there, the map of the United States, you can see all these little dots. All those dots are sales tax jurisdictions. So if it's not complicated enough about what states do what and what the item taxability is, there's so many pockets of jurisdictions. Once again, they have special taxes. So I can drive 10 miles from my house in north and I have, it's about 2.5% different sales tax. I can drive 10 miles south of my house and it's about 1.5% different sales tax. So it's varied so much and it makes it very, very complicated for customers. And to the point of the solution before, or the presentation before, customers want a good experience, right? So you never win customers by saying, wow, this company does the best sales tax calculation in the world. But what you will get, though, is folks that come after you if you charge them the wrong sales tax. They will come after you. There's a lawsuit that just came out this past week against Dunkin' Donuts. I don't know if you guys saw that. $14 million class action lawsuit for the state of New Jersey and the state of New York because they sell whole bean coffee and they're taxing it wrong. So people will come after you for this stuff. It's bizarre, but true. And so, you want to avoid stuff like that, right? So there's just all kinds of nuances around the taxability on jurisdictions. I'm going to show you an example of that in a minute. And then also on the items themselves. So Nexus is your responsibility to collect taxes in a state. So your liability to collect taxes in a state. And this started many years ago, and some of you guys have been around for a while, and I will confess that I've been around for a while. Remember Quill office products? Anyone remember Quill, right? Okay, so used to send you a catalog, and you go through and you order your stuff, and they ship it to you, right? Well, that was wonderful, right? It was early days of e-commerce. It wasn't really electronic, but early days of retail commerce. And so the state of North Dakota said, you know what? If these guys were buying goods in my state, they'd pay sales tax. So, who's this Quill coming in and shipping goods to my state and not collecting sales tax, right? So there was a lawsuit that was came about around that, and Quill versus North Dakota. And that sort of started the whole thing about Nexus. And what is Nexus? So what the government decided to do was say, well, Nexus is your presence in a state, which determines your liability in that state to collect taxes. Well, what does presence mean, right? So it was up to the states to interpret that, and it still is to a certain extent. So many folks have tried to get together and say, the government needs to define what presence actually is, instead of leaving each state up to their own interpretation. But unfortunately, that has never happened. So it's still wide open. So Nexus is changing. So Nexus is your responsibility to collect taxes in a state. So some of the things that create Nexus that we know for sure, once again it varies slightly by state, are listed here, and some of them are pretty abstract. Some of them are obvious, right? If you have a distribution center or if you have an office or some sort of real property in that state, obviously that makes perfect sense. But there's also things now like field staff, service staff, back to those folks who come to talk to me about services, right? So you have to think about, do you have a service person in that, or a warranty person in that state? Because that, in many states, constitutes Nexus in that state. So you need to be very, very careful about that. Doing drop shipments, of course. Fulfillment by Amazon is an obvious one. I think all of you guys who do that realize that in the 11 states that they have warehouses, you have Nexus instantaneously. So you have to be very, very careful about what constitutes Nexus. Doing a trade show. So if we sold a tangible good at Avalara, which we don't, but if we did, by me being here would constitute Nexus in this state, and therefore I would need to collect taxes for the state. So you need to be very, very careful about that. In addition, there's things that have occurred, right? So affiliate Nexus. So if I have a banner ad on someone else's website and someone clicks through and purchases, guess what? The affiliate being, say they're in New York, now I have Nexus in New York. So you need to be very cognizant about the things that create Nexus. And as I mentioned to you, our For Dummies book, and you can download this online as well. It has a lot about that. It goes into great detail about that, right? We also have a survey on our website. It's just 10 questions that will help you determine, do you have Nexus and what state you have Nexus in. So I would encourage you to also check that out. So the other thing that's very interesting, and this is from the National Retail Federation, which we participate with them as well, look at the number of folks that say, you know what, I sell goods online, right? No surprise there, especially National Retail Federation. But look at the folks that say that they collect sales taxes. Well, guess what? Back to one of my first slides about those states having deficits, right? So they're really going after e-commerce providers or e-commerce stores because they know that that's where the gold is, right? So a lot of these folks are probably not compliant, and they're being very diligent about auditing them. So the other thing, as I mentioned before, in the map of the United States, all the little dots of the different colors, the jurisdiction. So some folks have used a concept of using zip codes as being good enough or close enough for their sales tax calculations. But as I mentioned before, because of all the states having special taxes in cities and so forth, that is not good enough. So you have to go down to the rooftop level. So we have rooftop or geospatial technology in our solution. In fact, it's so comprehensive that there's 11 states who actually use us to do their tax auditing, right? So they use our technology to determine the taxability of a different building in a jurisdiction. So this is an interesting diagram, and there's many, we have several of these that we use. This one's in Colorado, and you'll see the two shades, so the red and the non-red, right? So there's two different tax jurisdictions, and you notice that it's like, you know, who are these guys, right? So, whoops, I just turned it off. I thought it was a pointer, maybe not. Anyway, so you see little pockets of people. So we tease, it's like, I wonder who this guy really ticked off, right? So he's in a different tax jurisdiction than all of his neighbors are. So, but it's that complicated. It's just random. There's no rhyme or reason. And we do that validation for you. So you don't have to worry about, you know, am I charging the right tax? So the other thing I find is super interesting is the item taxability. There is so many variances and so many things that people think about. We talked about the Dunkin' Donuts, the whole beans coffee. New York has some very unique things. As an example, a belt or any kind of clothing in New York is not taxable unless it's more than $100. And if it's over $100, it's a luxury good, so therefore it's taxable. So you have to be very careful about things like that. So item taxability has a lot of variations by state as well. The ones that have the highest variations are as such. And you have to be very careful, once again, about digital goods or downloadable assets. Very, very different opinions by states about are they really an asset or not. So if you think about a concept of, you know, if you were to buy a book, unless it was a religious book or a school book, it would be taxable as a tangible item. But in some states, they still haven't caught up and said, well, you know, that is still a tangible item and it should be taxable. They haven't categorized it as such yet. So some states do, some states don't. So it's one of the things to think about. If you do have downloadable assets, you need to be very careful because there's a lot of different opinions about what an asset is. Food and beverage in the state of Texas. If you buy a soda to go, the soda is not taxable, it's food. The cup is not taxable, but the lid and the straw are. So it's weird. And I have another example here too, I think it's kind of funny. So Hershey bar, taxable. This Hershey bar is not. Do you know why? Anyone here know why? No? Nuts? No. Flour. If it has flour, it's a food. If it doesn't have flour, it's candy. I don't make this stuff up. It's crazy, right? So it's just weird. Energy drink. I saw someone drinking a Rockstar before. Taxable, and the other's not. You know why? You're on the right track. She said dairy. It's considered nutritional. Yeah, I know. I know, it's crazy, right? So, but the other one's not. So it's just really weird. There's just a ton of really weird tax laws around that. So you have to be kind of careful. And it's hard to know, right? So one of the things that we have in our new solution for this year is we have over 10 million UPC codes. So if you sell items that have UPC codes, you just simply scan it and we would know the taxability of that for every state in the United States, as well as we have global capabilities now as well. So yeah, so it's just kind of weird. You have to be very cognizant about your items. So when you think about audit, so think about why and how to prevent that from happening. I'll give you a couple things that are kind of important to know. So here's a couple examples. I mentioned to you before, some of the states are really hiring folks to go after people they feel that aren't compliant. And they typically go in sort of themes, so they'll find a particular type of industry that are not compliant, and they assume that everyone in that industry is not compliant as well, and so they kind of go after them. But e-commerce is one of the top ones that they go after. So first thing you should do, go to our website. It's free. Download just a little survey. It helps you understand what your nexus is and what states you have nexus in. And I would definitely recommend doing that. Make sure you stay up to date with rates. Even if you don't use our solution, you can go to taxrates.com. We publish the data there. But bear in mind, the taxes change. On my slide with the United States there, over 14,000 tax changes last year. So you can go and download those rates for free, and you can put them in your system. We provide them for free, but you need to do every day, because you know what? Tax rates change constantly. So if you want to do that, feel free, but just bear in mind that that does not make you compliant. It's only as compliant as the last time you downloaded those tax rates. So be careful about that, but also think about what is my mechanism if you don't use a solution like ours to stay current with your tax rates. And then be very careful, of course, about your jurisdictions, and that one's kind of a challenge. So I mentioned to you that one of the first things that I do is take training, and in the training, after we think we know what we're doing, they give us some problems, right? So you're selling this good in this state, and this is where you're shipping it from, this is where you're shipping it to. And you need to calculate the tax on it, right? So we all did that. We're all feeling all proud about our answers, and none of us are right. And they said, we've never taught a class where anyone was right. So what we have to do is go to the state websites and read their letters about taxability of items, and then also do research about that tax jurisdiction. So very complicated, and it's up for interpretation. So the good news is we have tax experts in our company who sit there and do their interpretation for you. So once again, just be very careful about your jurisdictions. And be compliant from day one. And especially a lot of you guys I've spoke to are starting a new business, so start out with your compliance, and that way makes it very, very simple to not have to worry about it. It takes the risk out of your business. An audit typically costs anywhere from $15,000 to $40,000 just to manage the audit before any penalties or taxes or anything like that is assessed. So it's a lot of money. So it's very easy to stay compliant out of the gate. And also report your consumer use tax. So items that are shipped to you that were not charged tax, but should have been, and you need to report that as well. Make sure that you, once again, understand what your tax calendar is, your rooftop capability. Make sure you keep good records, and maintain all that for when the auditor comes to visit you. So I mentioned services before, and I've talked to a couple of you that deliver services with goods. This is a hot button area for auditors now, and a lot of folks bundle their goods and services, right? So I sell this and deliver it and install it. Well, that's a problem. So most states, there's taxability on services, and certainly taxability on goods. And when you bundle it, that's a red flag for an auditor, and they're going to go after that transaction. They probably won't do the service of unbundling it before they assess you a penalty or back taxes on it. So do yourself a favor and unbundle your services. Make sure they're delineated, and save yourself some headaches in the future. So here's a couple examples of some of the things that are taxable or non-taxable. We have a list of them on our website as well. We have a lot of videos and whiteboard sessions and things like that, a ton of educational content on our website. We don't believe in selling our product. We believe in educating folks and letting them determine, is our solution a good fit for them, right? Is it something that they need in their business? So everything on our website is educational in nature. So I'd encourage you to check it out and see if there's some information that we can provide to help you. And as I mentioned before, the bundle transaction, just once again a red flag. So do yourself a favor, unbundle, and at least on the backside. If you want to have a line item invoice for your customer, that's fine. But on the backside, make sure that you've delineated your items. And of course, there's a easy solution to this, right? So automate your process. We intercept the transaction. We integrate with over 400 e-commerce solutions and ERP accounting solutions to transact taxes, so to calculate the transaction. We intercept it in a nanosecond. We deliver that value back to you. We accumulate that information into a dashboard. And that dashboard, you could simply download a tax form from us. We supply it to you. You can manually fill it out and mail it in, or we can also automate that process as well. We can populate that return, e-file it for you, and do the treasury piece of it for you as well. So we have the ability to do all that in sort of a closed loop process for pennies on a transaction. It's very, very cost effective. We guarantee all of our calculations and our remittances, so you never have to worry about when the auditor comes. We're standing there beside you and we validate and support you in that. And as I mentioned, most states use our technology, so we don't usually ever have any problems with them. So kind of a low risk, low cost way to remove this from your plate. So what do you need to do? So think about, do I need a solution like this, or do I need to address this issue? So once again, do a nexus study, sort of assess what your risk is. What would it mean if I were to get audited? Would I be compliant? Would I not be compliant? What would the implications be? What would the implications be to my customers, right? Am I maybe charging the wrong taxes to my customers? So just do sort of a gut check, right? And determine whether or not it makes sense for you to look at a solution. And as I mentioned before, we do it all the way end to end. We also have global capabilities now. And we also manage exemption certificates, which is another hot button for customers and vendors as well. So with that, once again, I encourage you to go to our website, do a Nexus study, download the For Dummies book. Quick read, it's just, it's like 40, 50 pages, but it will definitely educate you. Reach out and speak to someone from Avalara. I'm here all day. I'll be glad to speak to you guys as well. And, just help you understand what your tax issues are and how we can help you. Thank you so much.